Welcome everybody, my name is Yael De Bruyne and today I'll be presenting to you about the topic, the worrying economic growth of China. This is to do with the major economic decrease in China.
Hello, my name is Mike de Rieduiten, and as my co-presenter has stated, this presentation will be about the economic growth in China. First, we must understand what economic growth is defined as. Economic growth is defined as the increase in real GDP over time in an economy. More specifically, China's economic growth. Real GDP is the real gross domestic product, which is a measure of the economic output adjusted for price changes for deflation or inflation.
Good day, my name is Esme Drieduiten, and for our research we've analyzed an article by The Economist on the worries about slowing economic growth in China, and from this article we've extracted the following question. If the data on China is so strong, how come so many people are so down on China? This question focuses on the decrease in economic growth in China over the past 4 years. It is believed that China massages its data to make it more smooth and more subtle than the actual data is meant to be.
China states that its year-on-year growth period over the last 6 months includes these statistics. These statistics actually show such a tight cluster of statistics and percentages, and it's mostly improbable that China's economic growth included these statistics. And so it's actually believed that the economic growth within China was actually 5 to 6% within the last few years, since about 2012, 2013. And so it shows that it has smoothed out its data, and it has in a way lied to its people, to the people of China, that they might be actually ending up in a crisis rather than keeping it a secret and continuing the way they are, going into a major crisis in the future. There are several reasons thought as to why the economic growth of China has been decreasing. The first one includes global commodity collapse and a plunging stock market in China. Also, there's a downward pressure on the yuan, which is the currency of China, and it has proved to have devalued within the global market. It's proved that it's not as strong as it used to be, and while Chinese people might think that it's still a strong currency, it has proved that it's actually been decreasing a lot over the last few years.
China, which is thought to be a fast-growing economy, which it still is, has been showing some weaknesses in their economy. It includes heavy industry in bad shape, blighted by overcapacity, falling demand, and service centers from finance to healthcare are more robust.
Yet this is only the beginning, and it's thought that much worse is to come. China's national debt has gone from 150% of its national GDP before the global financial crisis of 2008 to 250% today.
Chinese traditions based on manufacturing, investment and exports are currently, due to this debt, transitioning towards a model focused on domestic consumption, services and innovation. This is due to ongoing transition of the Chinese economy due to lower commodity prices, to lower exaggerations and domestic shortcomings in some countries, like insufficient structural reforms.
Due to the transitioning economy in China, The Guardian has revealed there to be 4 major warning signs that set China worrying. First major warning sign is growth. Due to incorrect data and China's own way of looking at indicators like electricity use and railway freight volumes, the indicators lead to skewed data and data that does not correspond with global data. The second major warning sign is the cutting of interest rates. The cost of borrowing in China has been cut aggressively since the autumn of 2014. This was in response to their slowing economy, as well as distress caused to property owners, local governments and corporations by high debt servicing costs.
There has also been a decrease in the housing market within China. This has led to the increases in interest rates these increases in interest rates have led to higher debts for people when they take, for example, a mortgage on their house, or they decide to lend some money per month or per year, and the interest rates have led them to have to pay back the bank or government with a larger amount than they actually initially took out of the bank.